2021 has been a year of pain and gain. It was a painful year because of the second wave, but it's been an eventful year and it's been a year of riches for investor. But there is one more word which I would like to describe to capture my next guest on the show, and that is resilience. And that is what State Bank of India has exhibited in this pandemic crisis. I've used this line before to describe the stock performance of State Bank of India, that elephants can also dance, and that's what State Bank of India has done. It has handsomely managed to beat the market, the bank nifty, and some of the other peer banks. So how are things looking for the bank, business, economy, and for the man who's the chairman of State Bank of India for next year? So let's discuss all that and much more with Mr. Dinesh Khara, chairman SBI. Mr. Khara, 2021 was a slow year, but it is finishing in a grand style. Do you think 2022, the aggregate demand, the economy, the comeback what we've seen is here to stay, or do you think this is sugar rush which will fade away?
No, I think to my mind, the trend which you have seen, say ever since from the month of October onwards, it has shown a huge amount of promise in terms of the demand coming back, in terms of the supply chain aberrations getting addressed. I think the only thing is the recent variant, which is actually causing a bit of a concern. So hopefully, I think if at all we can tackle this variant also well, to we should be, and if at all we succeed in doing that, I'm quite hopeful that the kind of a recovery which you have witnessed in last 4 to 3 months, that should be there to stay, and hopefully the year 22, calendar year 22, should be much better than what we have seen in the early part of the financial year 21-22.
So since we are in a progressing cycle, the year will be much better. But will 2022 calendar year, will it be a grand year? Because now looks like we are at the cusp where capex is about to start. You guided for a 10% credit growth. Do you think that will be a big reality in this coming year?
As I mentioned, that the only issue could be the new variant, and I'm quite hopeful that we should be in a position to navigate this difficulty also very well. And based on that, generally tended towards optimism. So I would rather say that 22 should be much more promising year, and we should be in a position to see much stronger growth to stay on.
And high inflation and possibility of a sharp rate hike, do you think that could disturb the apple cart?
I think the kind of preparedness which is there in the system today when it comes to the healthcare and also the capacity to deal with such emergencies and exigencies, I don't expect that this particular variant should be impacting the apple cart per se. And if at all, whatever is seen in the West, if at all that is a guide for the things to happen, perhaps it has got the much higher transmissibility, but not as severe in its nature. So I think if at all that is what it is going to be, even in the worst possible situation, we should be in a position to navigate it well. This is what my assessment is.
So while 2021 we've seen comeback in retail, we've seen some comeback in SME, but the corporate real demand for working capital plus new loans is still muted. When do you see that coming back?
In fact, if you really ask me, for last 2 months, we have seen some kind of attraction as far as the corporate availment of the limits are also concerned, because at a point of time we were having as high as about 5 trillion Indian rupees worth of unavailed limits from our system, from the corporate side. But we have started seeing the availment happening in last 2 months. Of course, for last about 15 days, there is some bit of a slowness which is seen. But otherwise, if at all that trend continues, which we have seen for last 2 months, that should go very well in terms of more new investments also happening from the private sector. We already have got pipeline which is almost about 1 trillion plus Indian rupees for proposals both for the private sector investments into various sectors, and also some enhancements in the working capital also. I think the other very important aspect is that the supply chain related dislocations which are there, there is an attempt on the part of the corporates to address those supply chain related dislocations also. So actually, all said and done, this actually augurs very well in terms of availment of corporate credit from the system, and as well as new proposals, sight of new proposals.
Mr. Khara, if one looks at the banking landscape, sir, how do you think that this credit cycle will be different from the previous credit cycle, both in terms of demand and in terms of NIM spreads?
Sorry, Nikunji, I'm unable to hear you.
No, I'm trying to understand from you, sir, is that how do you think that this current credit cycle, which let's say started couple of months ago, will be different from the last big credit cycle we saw? I mean, what will be the difference and similarity between this new credit cycle versus the last credit cycle?
I think the new credit cycle is coming at a point of time when the borrowers are quite responsible in their behavior when it comes to borrowing. So they are quite mindful in terms of how much leverage they should raise and for what all activities they should raise the leverage. So this kind of a responsible behavior from the borrowers actually makes a significant difference in terms of the likely credit behavior on the part of the borrowers, and as well as from the banking system also. The mistakes which were committed at the time of the last big underwriting exercise in the year 2008, etc. So I think people have learned the lessons, though it's a bit of a hard way. The structures and systems have been strengthened quite a lot. And I think to that extent, the accidents which we saw post the big credit cycle which we saw in the year 2008-9, I don't expect those to recur again.
But since you've garnered strong CASA in the pandemic time, when the interest rate cycle will start reversing, can I safely assume that you will enjoy superior spreads because of that, and that is one differentiating factor?
I think the spread is also a function of at what price we're in a position to lend. And since in the initial stages, there's going to be disruption on both the sides, so we'll have to wait and watch how really things really pan out. But yes, nevertheless, our effort overall is to generate as decent NIMs as possible.
Is 3% plus the new normal for SBI NIMs now?
New normal for SBI NIMs is 3.1% plus.
Okay. Walk us through.
We're trying to be around 3.2, 3.3, but nevertheless, we should stay above 3.1.
Mr. Khara, while there is marked improvement in all your metrics, all your key metrics, whether it's NPA which have come down, NIMs which have improved, but the cost to income ratio, sir, you are attempting to get it under control, but there is limited success. There is no remarkable success. Why is that?
There are certain rigidities when it comes to the cost structure of the bank. So in such a situation, the only way out is to improve the income stream. And as the economy was reeling under various kind of pressures, so the ability of the bank to really significantly improve the income stream was actually quite limited. So hopefully once we have a clear normal year, we should be in a position to significantly improve our income streams also. And that will probably help us in bringing the cost to income ratios in check and control.
So do you see in next financial year or next 12 to 18 months your cost to income ratio coming down, however your ROA is improving? Because now you are at your size, little bit of change, a downtick in cost to income ratio and improvement in ROA is going to change your profit profile significantly.
You're right. Absolutely. I fully agree with you. And that is our endeavor. And we are trying various kind of things, and hopefully we should be in a position to demonstrate some definite results in about 3 to 6 months time.
But in general, sir, when you look at the economy, has the demand pleasantly surprised you? Let's say a year ago, we all were guessing, while you were confident, at least I was crystal gazing because I was not sure of the economy to come back, but it did come back. You got it right. But secretly, are you also surprised?
No, actually, to my mind, the way I looked at it was that, the disruption happened. It was so sudden. And I was quite confident that once it will come back, it will come back with a vengeance. And that is something which we have seen also, we have experienced as well. Because the month of October, November actually are testimony to what I just mentioned. So I think I'm quite confident that as and when the cash flows of the corporates gets improved, as and when the cash flows of the SMEs will get repaired, it's going to be a demand which will be which perhaps we would not have seen in the past. And hopefully, with the supply side constraints getting addressed, uh, the the economy should be moving at much smoother pace going forward. So that's how I look at the things. And I'm now, with the kind of vaccination which has already happened, it actually enhances the confidence in terms of ability of our people to come back fast also.
Mr. Khara, big sectors are returning now. Steel, the profit cycle for steel is profits like never before. Textile, a completely beaten down sector where banks have a huge exposure that has completely turned around. Power, the worst is behind us. New capex has started. What does the comeback in some of the big sectors mean for State Bank of India's balance sheet? Will bad loans start becoming good loans now? They've started becoming in some pockets, but will we see more of that going forward?
No, I would say that some of the bad loans where our ability to really fetch better value that has increased significantly, particularly in the textile sector. And actually, it's a function of the real economy. Once the real economy starts moving up, and when some of these core sectors starts, when people start evincing more and more interest into those core sectors, that's a point of time when we are in a position to fetch better value. And the resolution of the brownfield capacity happens at a very attractive valuation. So I think uh, this is part of the trend which you have seen in the past also. And we hope to see similar trend going forward as far as our impaired book is concerned. But yes, of course, there's the first step. And the second step is augmentation of the capacity, so which actually bring in proposals for investment credit. So that is the next step which we hope to see. We have already started seeing that in the iron and steel sector. So hopefully in the other sectors also, which you mentioned in terms of textile, which you mentioned in terms of, the power sector. So hopefully there also we'll get to see the similar kind of a cycle going forward.
So, what does the new digital economy mean for a bank like State Bank of India? Because now the economic engine is also driven by startup, which don't come to banks for capital. It is also driven by new tech companies which don't need capital because they're getting venture capital. So, growth at a real level will be there. But do you think banks are unlikely to be a big recipient of the growth because different part of the economy is growing now versus what happened earlier?
Actually, these new age instruments are essentially funding the equity requirements. So I think to some extent, the capital deficient nature of the economy, which you have seen in the past, the new tech has actually ensured that that kind of equity be available to them. So naturally, with the equity coming in, and there will be the requirement for the debt too. So equity per se is quite expensive as compared to debt. So that is the reason perhaps equity will be a lever which will help people to go for raising more and more debt. So with that in mind, people will be having a mix of both equity and debt when it comes to the finance returns.
But do you see the capex cycles to be a multi-year cycle, 2, 3, 4 year cycle? Because you're the best person to answer this one for us.
No, I agree with you because today, if you really ask me, the kind of a growth ambition which our economy has got, as of now, we are around $3 trillion economy, and When it comes to the debt to GDP ratio, particularly banking debt, then it is about 56%. If you reckon the market related borrowings also, then it will be somewhere around 90%. So considering the fact that we have got an ambition to grow to 5 trillion ASAP, to my mind, this debt to GDP ratio need to improve, and that if we look around the developed markets, it is as high as about 200 odd percent. So I think there is a huge scope for this particular banks also to contribute their might in the country's journey towards the 5 trillion economy. And of course, for that we need more capital for the banking system. We need more and more liabilities coming in. As of now, for this 3 trillion economy, our loan book size from the banking system would be about 1.6 trillion. We expect that for 5 trillion, it should go up to about 2.6 trillion. So that is what our expectation is. So I think all said and done, there's a huge opportunity for the banks to really contribute in this journey towards 5 trillion.
So when you're so confident of growth, a 10% credit growth cannot be ruled out. Why is that we've not heard any update on fundraising? Are you confident that you'll be managed to, manage with the existing fund, or it's a matter of time that you will hit the market to raise capital?
No, we have already raised 81 and we have raised almost 10,000 crore worth of 81 in the current financial year. And if I may add, we have actually revived the 81 market in the country, and we have raised it at very, very decent pricing. So that is something which we have already done. And apart from that, we'll have a plowback of the current year's profit also. So we expect that with these kind of funds, we are quite comfortably placed for supporting the growth for the time being. But yes, we will very closely monitoring the growth trajectory and the trends. And at an opportune time, if at all required, we'll be approaching market too. But as of now, as the situation stands, we seems to be quite comfortable in terms of our resources and our capital position when it comes to supporting the growth ambition of the economy.
And are you also betting on some bad loans becoming good loans? Because when that happens, that will cushion your balance sheet. Are you also betting on that? Because if that happens, you again will get a capital cushion.
Yeah, that of course is one of the levers, but it's always a combination of multiple things which we normally account for and we plan accordingly.
Just to get this one right, as of now, what you're sharing with us is that you got no immediate plans to raise capital. Can I say that for next 6 months, you are unlikely to hit the market if all goes well?
I think for the next 6 months, we may not be there in the market for raising capital. But yes, of course, much of it will depend upon the sustainability of the growth trends which we have seen in last 2 months, 2.5 months time.
Are you also factoring in some inflows from SBI mutual fund listing to happen in the first half of FY23?
Yeah, intention of listing of SBI mutual fund was more guided from the fact that it has become the leader in its own right in the AMC industry. And being a leader, it is a natural aspiration on the part of the company to get itself listed. So with that in mind, we have this plan, not really to augment our capital base. I'm like an old parent, don't believe in really monetizing the subsidies for supporting the parent capital requirement.
How happy do you feel every time when anybody mentions that State Bank of India stock is the best performing large cap bank this year and it is up more than 65%?
Sorry, I missed out the first sentence which you mentioned.
No, I'm saying how happy do you feel, sir? How happy do you feel if sometime when people mention the stock performance of SBI this year?
Actually, it's a very positive feeling. Look forward for more such statements to come from our valued investors, valued stockholders.
It's such a great feeling, sir. I mean, I remember beginning of the year when the turnaround happened, we were using this example of that who says elephants cannot dance, and State Bank of India under your leadership has definitely done some magic. Mr. Khara, you are aware of what is happening in the fintech space, and is now a gold mine given where the fintech valuations are. Isn't this the right time to take public? I mean, it has reached a size, it has reached a scale, and this is the right market to take it public.
Well, I think when it comes to taking public or using it for building up our internal efficiencies, it's not a very easy decision. But nevertheless, we feel that it was initially intended to be a very important delivery channel for the bank. So we would like to nurture it even further. And maybe at some stage when we will feel that, yes, of course, it's a time and we can probably make it a white label, we'll think in terms of it. But it is some time away from now.
So what are you waiting for, sir? Are you waiting for it to become bigger in terms of your vision of the market cap there? Are you waiting for, I mean, what is the right moment according to you?
To my mind, we should have a significantly larger size of the customers being served by and also its acceptability across the wider universe. So that is something which we are working on, and we hope that it will actually acquire that kind of a position.
Mr. Khara, but how do you see the fintech space moving? Because fintechs are essentially now attacking the entire chain of banks. Some are targeting mutual fund distribution, some are targeting the lending business, some have gone to lend even in the microfinance space. Every fintech is uniquely attacking the entire chain, which up until now has been controlled by big banks.
The way I look at fintech is that they are operating in a niche market and they are offering efficient solutions. So as a large bank and the leader in the banking industry, we believe in consuming the solutions offered by the fintechs. And to that extent, our approach would be more collaborative with them. So we will collaborate with them and see to it that the efficiencies in operations, but whatever can be embedded into our processes, we will embed that and will make the operations of the bank more efficient.
Is the stress in the insurance business, which is an important subsidiary of SBI, over, given that there were a lot of write-offs and business slowed down because of COVID?
No, I think practically all the companies have done well, and thanks to the greater adoption of the digital, and our subsidiaries could continue to do very well during the period of COVID, and we did not face any heat essentially on account of the COVID.
So the fact that you just increased interest rates less than 24 hours ago, effective, in some deposit schemes, how should one read into it?
See, interest rate is a phenomena which is attributed to the market forces. So I think all of us keep a very close eye in terms of the interest rate movement of some of the key indicators, which would be T-bill, which would be reverse repo, which will also be the GSEC, and how the competitors playing out. So naturally, all these factors are captured and they are very closely reviewed by our asset liability committee, and accordingly, we take decisions in these matters.
But progressively, sir, do you see a big comeback in fixed deposit rates? Because everybody wants to hear from India's biggest banker.
Maybe for the time being, still there is surplus liquidity in the system, and as and when we will assess the situation which warrants an increase in interest rate, we'll be quite mindful in terms of the market realities.
Mr. Khara, 2018 to 19 were the repair years for State Bank of India. 2020-21 were the year of resilience for State Bank of India. How would you define 2022 and coming years for State Bank of India?
Hopefully the year of growth.
And define growth for us, sir. I mean, what is that ambitious growth number which you think is the achievable number?
Growth numbers, both in terms of the top line as well as the bottom line, and also improvement in the efficiency ratios. I have at some point of time had indicated that I would like to see the ROA of 1%. So hopefully we should be in a position to see that kind of a ROA and ROE exceeding 15%. So that is what our ambition is in the near term, to cross ROA of 1 and ROE of 15.
You took over as chairman of SBI when we were in throes of pandemic. Hopefully things are looking up and fingers crossed that we'll not see a third wave. Was it difficult? Was it scary when you took over as chairman of SBI in middle of pandemic?
Well, I think I don't really get scared because I always believe in, dealing with the situation and dealing with the situation with a positive mind and with all constructive approaches. So that is something which I had the confidence of doing it in the past. And I was guided by my past experiences and the results which I had got out of such efforts. So that is something which was there on the top of my mind. And hopefully till now, I think I've been in a position to lead the organization with those value systems and those kind of beliefs in mind.
And final question, Mr. Khara, it's that time of the year we ask everybody that what is your New Year resolution, a resolution which you will make this year and you're confident you will not break on 2nd of Jan. What is the New Year resolution for you?
New Year resolution will be we must cross ROA of 1 and ROE of 15.
So that's a professional resolution. I was looking for a personal one.
Personal, okay. Even personal is the same. That's why I keep on saying that I have the I in SBI. So that is something which I would like each one of the SBIs to feel like that.